Good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is for Monday, the 21st of October, 2019, about 5:15 in the afternoon. Well, as you can see, a small down from where we closed today. Silver's really having a problem, and with that, I've done my new silver video. It's on our website under research. You'll see Ira's silver report. Click it, and away you go. But I've brought you up to date there. Now that we have finished our project, I'm going to be able to do more and more of these reports. I want to remind you on my metal reports and my other special reports, you only get to visit a few of them if you're not a client, a funded account, or a subscriber to my research. You will get a few free ones, and then after that, it's going to be pay as you go. Want my information? Either support these videos in some way or support that. But to make a long story short, we're in a very, very key area right here. The market's got resistance. It's respecting it. We'll see where you go. In the copper, you were up today, but one of the reasons you're up is what's going on in Chile. Tremendous unrest. In Santiago, they had closed stores over the weekend. There's been riots. Now Escondida is joining the two other large mining companies that are on strike. The ports also are going on strike. So you got to be very, very cautious. It offers the market what I'll call temporary support that may not last fundamentally. Keep that in the back of your mind. I was wondering today, why is that market up most of the day? And that answers it. So when we take a look at a weekly chart of closes on the gold, you're down $5.80 today. You're still following this pattern, this red. You might be going back towards that 18-day average, as we've talked about, to see if that offers the support the market might need. When we take a look at the action on a daily bar chart, you're still caught in this middle of no man's land. I'm going to label it from this 1460 area all the way up here to the 1545, and you just keep marching up and down there. There's a bent to the downside, and you'll see that in a moment. You've got a pattern of lower highs and lower lows. That's bearish unless today's high is taken out, which was an outside day down. The market tried today to get a rally going, failed, and as you can see, the market is breaking back down from there. If you took out today's high, it's an outside day down, then I'd look for the market to go back to the closest moving average or Bollinger Band, the closest of. The 18-day average is right there. And to get over that number, you'd be over that average. So that could be, believe it or not, a sign that if the market got over it, that you're going to look for the Bollinger Band at 1519.60. So for the next two trading sessions, that number's live to me. Let's assume that you don't take that out and you head down. I'll be looking for support between the Bollinger Band and the 100-day average, the 1475 to 1465 level. So far, bias down because you're under the 18-day average, trend down because the swing line is down, and momentum is down. But momentum, if you take a look at this number, you're already under 30. Therefore, you're now in oversold territory. Nowhere near converting from oversold to embedded. So I would say that this is a support area that those that are short might be respecting. In GLD, you had the same type of action. You failed against the 18-day average. You had an outside day down. Take out today's high on Tuesday or Wednesday. That'll give me the idea that possibly the upper Bollinger Band comes into play as you capture a group of shorts under here. Let's assume you don't take that out. Well, momentum is down and not oversold. You've got to be under 30 to have an oversold reading. Neither of these numbers are. The momentum is down because you're under the 18-day average. The swing line is down. That puts into play 138.92, the lower Bollinger Band. If that were to give ground, maybe the 100-day average at 137.02 comes into play. GDX, if you take a look at today's rally, this rally here at 27.35 is higher than today's high of 27.30, and you had an outside day down. Now, we expected that we were going to have some, let me come back to this, resistance from down here. The first number of resistance was the 100-day. If you clear this high, that puts the 18-day average into play. The market hadn't been there. This is Friday's action. Today you go right up, fail against 2730, the 18-day average of closes. Outside day down, you catch this group in this resistance area. If the market continues to drop, 2613 could be where the market goes. I'd be cautious here. You're oversold already in this market. So does it have to go there? Nothing ever has to happen, but even if you get there, you're in oversold territory as you do so. The gold-silver ratio broke down today in favor of the silver, but if you go back here, you've really got to get under, and the settlement on this low was 84.56. Right now you're at 84.59, so you're playing with that. The momentum has changed because you're under that number in favor of silver over gold, at least on the closing basis that we looked at. Now when I look at silver, you've got the pattern of higher lows, higher highs. If you look at this number, I was looking for the market today, the 45-day average, which I don't show here, was 1789.5. It got up to that number, and then from there it fell right back to the 18-day average of closes. Momentum is flat in the market. You have higher lows, higher highs. The trend is still up. If you were to take out 1742, what you would do is you'd lose that uptrend, but this pattern would not turn that trend down. You would then have a higher high and a lower low and supports at 1720. I did my silver report. I recorded it for you. We'll talk about it in a minute because I really covered an awful lot in it today. In the copper market, as I said, this market rallied up, and this news was known about what's going on in Chile. I find it fascinating because they're supposed to have this conference, the Asian Pacific, in Chile, November 16th and 17th, where Presidents Xi and Trump are to meet. Well, if they're having all this when the city's closed down, I don't know why anybody's going. We'll see if it lasts that long. But you've got a lower low, higher high, which means no trend. You've been running the upper Bollinger Band. The resistance was the 100-day average. Now, on a pullback, the 100 might be near-term support, bigger supports all the way at the 18, but you're overbought as can be. In the platinum market, you're failing at the 18-day average of closes. So the market got up to it, threw itself back. You still have the pattern of lower highs, lower lows, which is bearish. I see support at 876.60, the 100-day average to the lower Bollinger Band, and I have divergence on this chart. I have momentum trying to turn up and prices trying to turn down. In the palladium market, as long as you keep the embedded reading, and I thought it was going to try to lose it back here, right here on Friday, and it didn't. The market regained itself beautifully, but it's also having a real hard time at that upper Bollinger Band, and you can see how the market's doing right there. This is still the strongest of all the metals. I haven't changed my opinion. I'm continuing to say that. And in the dollar index, I'd be a bit cautious here. You've now gotten under the 100-day average and the lower Bollinger Band. You've extended this run. This market might be ready for a small pop. Will we embed? Now, embedding takes 3 days under 20. You had it today. You had it on Friday. You did not have it on Thursday. Typically, you don't embed, so we'll see if the market does what I think and gives a bounce in it, but it could embed on that bounce still, so I want to see what it does. As I said, I did my silver report for you today, and that's the first one I'll bring up. In metals, I'll do the gold shortly, too. But I hadn't done one in quite a while, and we wanted to get our website set up to track who's seeing it and so on and so forth. If you're a subscriber of mine to my morning subscriber video, you have access all the time to my reports. If you're a client of ours with a funded account, you do. The rest of you get a few reports that you look at, and then you can either take one of our subscriptions so you can see these special reports, but they're going to come out, a lot of them, in a host of many markets. Now, what I did in this report is I covered the monthly, the quarterly, the weekly, the daily charts, the 15, the 30, and the 5-year seasonal patterns that the market has, the historical patterns. So if you want to see what I think is a pretty complete report, and I give you an idea as to what the key numbers are, go to our website, www.iraepstein.com, under the word research. When you move your cursor there, a drop-down menu will come, and you'll see Ira's special metal report, the silver. I'm Ira Epstein. Hope you enjoy it, and I will talk to you tomorrow.